How does VAT work across European countries? Imagine shopping in Europe and noticing different prices for similar items. You might wonder why some countries charge more or less on goods and services. That's because of the way value-added tax, or VAT, operates across the continent. Let's explore how this tax system functions and what it means for Americans living, working, or retiring in Europe. VAT is a consumption tax applied to most goods and services bought and sold within European countries, especially in the European Union. It is added at each step of the supply chain, from manufacturing to the final sale. The key idea is that VAT is based on the value added at each stage. For example, if a manufacturer sells a product to a retailer, VAT is charged on the sale. When the retailer sells to a customer, VAT is added again. The final consumer pays the full VAT amount, but businesses can usually reclaim the VAT they paid on inputs. Every European country sets its own VAT rate, but they must follow EU rules. The minimum standard rate is 15%. Countries can choose higher rates, and some have special reduced rates for certain goods or services. For instance, Luxembourg has a standard rate of 17%, while Hungary's is 27%. These rates can impact your shopping costs and business expenses. VAT is generally paid where the goods or services are consumed. If you buy something in France, you pay French VAT. If you are purchasing within the European Union, VAT is due in the country where the final customer is located. For business-to-business transactions, a reverse charge system often applies. This means the buyer, not the seller, accounts for the VAT. It simplifies cross-border trade and avoids double taxation. When exporting outside the European Union, VAT is not charged by the exporting country. Instead, the importing country applies its own VAT rules. Exporters must keep proof that goods left the EU to reclaim VAT paid on inputs. This process helps prevent double taxation and encourages international trade. Registering for VAT is mandatory once a business exceeds a certain turnover threshold, which varies by country. Some countries, like Greece, requiring VAT registration regardless of turnover. If you plan to start a business or engage in taxable activities in Europe, understanding these registration rules is essential. For Americans living or working in Europe, VAT affects everyday purchases, business dealings, and imports or exports. Knowing the rates and rules helps you budget better and stay compliant with local laws. For retirees, VAT influences the overall cost of living, including groceries, dining out, and services. In summary, VAT in Europe is a country-specific tax system that follows EU guidelines. It applies broadly to goods and services consumed within each country, with special rules for cross-border trade and exports outside the EU. Being familiar with how VAT works in your country of residence or business can help you manage your finances and legal responsibilities more effectively.